What if I told you there's a country where property prices have dropped 50% in the last decade, where thousands of homes sit empty in the capital city, and where a political earthquake just created the biggest real estate opportunity in South America? Welcome to Venezuela, 2026. So here's what just happened. In a move that shocked the world, former President Nicolas Maduro was captured by American forces in early 2026. After decades of economic collapse, hyperinflation hitting 600%, and an oil economy that shrank by 75%, Venezuela is standing at a crossroads. And for those paying attention, the real estate market might be about to explode. Now, I'm not a financial advisor, and this isn't financial advice. But if I were looking at Venezuela right now, here's exactly how I'd be thinking about it. Let's start with the elephant in the room. Venezuela's economy has been in free fall since 2013. We're talking about one of the worst peacetime economic collapses in modern history. The currency, basically worthless. The official exchange rate jumped 479% in just 1 year, and the black market rate is almost double that. Construction has been paralyzed for over a decade. In Caracas alone, there are 3,000 empty homes, 600,000 square meters of vacant office space, and massive surpluses in industrial and retail properties. But here's the thing about crises. They create opportunities, and Venezuela might just be one of the biggest contrarian plays on the planet right now. Let me break down how I'd analyze this market across 3 key dimensions: oil, tourism, and infrastructure, because each one tells a different story about where the smart money might flow. First, oil. Venezuela has the world's largest proven oil reserves. Let me say that again, the largest. But under Maduro, production collapsed from over 3 million barrels per day in the early 2000s to just 900,000 barrels today. The U.S. oil blockade that was formalized in December 2025 slashed exports to only 258,000 barrels per day. That's a 76% decline in just 1 year. Now, if there's a regime change and sanctions start lifting, what happens? Oil production could potentially rebound. And where does that money flow first? Into the cities that support the oil industry. Maracaibo, Venezuela's second largest city, is the heart of the oil region. If I were looking at long-term plays, Maracaibo would be on my radar. Property values are depressed, infrastructure exists, and if oil comes back, this city bounces back first. But here's the risk nobody's talking about. Even if sanctions lift tomorrow, it takes years to rebuild oil infrastructure. We're talking about refineries that have been neglected for over a decade, pipelines that need massive repairs, and a skilled workforce that's largely fled the country. The oil boom won't happen overnight. So if you're thinking Maracaibo, you better have a 5 to 10 year time horizon, minimum. Now let's talk tourism, because this is where things get really interesting. Venezuela has some of the most stunning natural beauty in South America. Margarita Island in the Caribbean, the Andes Mountains in Mérida, Angel Falls, the world's highest waterfall, Los Roques Archipelago, with pristine beaches. But tourism has been absolutely decimated. Nobody wants to vacation in a country with 600% inflation and political chaos. Change the regime, stabilize the currency, and suddenly you have a tourism infrastructure play. Margarita Island used to be a major Caribbean destination. Right now, hotels and vacation properties are selling for pennies on the dollar, if they're selling at all. If I were making a bet on tourism, Margarita Island and Mérida would be at the top of my list. The natural assets are there. The infrastructure exists, even if it needs renovation. And the upside is massive if Venezuela can stabilize. But again, the risks are real. Tourism needs security, stable currency, and international flights. Even with Maduro gone, it could take years to rebuild Venezuela's reputation as a safe destination. You're not buying a cash-flowing asset today. You're buying a lottery ticket that might pay off in 5 years. Maybe. Then there's Caracas, the capital. This is the most complex play of all. On one hand, Caracas has 3,000 empty homes and massive commercial vacancy. Prices are down 50% from 2014 levels. If there's political stability, Caracas is where government, banking, and corporate headquarters will rebuild first. The city has good bones, great location, and it's still the political and economic center. On the other hand, Caracas has some of the highest crime rates in the world. Infrastructure is crumbling. Power outages are common. Water supply is unreliable. If I were looking at Caracas, I'd be focusing on specific neighborhoods where the wealthy and diplomatic communities are concentrated. Not the whole city, just the pockets that will recover first when capital starts flowing back. Valencia, Venezuela's third largest city, is another industrial hub worth watching. It's been the manufacturing center of the country, and if foreign investment returns, Valencia could see a manufacturing renaissance. But manufacturing needs stable electricity, reliable logistics, and a functioning workforce, all of which are question marks right now. Here's what I think most people miss about Venezuela. Everyone's focused on the political change, but the real question is, what comes next? Because political change doesn't automatically mean economic stability. Venezuela has been through decades of corruption, capital flight, and brain drain. The educated middle class has largely left. The currency is destroyed. Institutions are weak. If a new government comes in and actually implements real reforms, opens up to foreign investment, respects property rights, and rebuilds institutions, then yes, Venezuelan real estate could be one of the best plays of the decade. But if it's just a different version of the same corruption and mismanagement, then property values stay depressed. So if I were actually considering Venezuela, here's my framework. First, I'd only invest money I could afford to lose completely. This is speculative, high-risk territory. Second, I'd focus on hard assets in the best locations. Not the whole country, just the specific cities and neighborhoods with the best fundamentals. Third, I'd have a 10-year time horizon minimum. This isn't a quick flip. Fourth, I'd wait for concrete signs of reform. Not just promises, but actual policy changes, respect for property rights, and economic stabilization. The cities I'd watch most closely: Maracaibo for oil recovery, Margarita Island for tourism, specific neighborhoods in Caracas for the capital city premium, and maybe Valencia if manufacturing comes back. But here's the biggest risk of all that nobody wants to talk about: expropriation. Venezuela has a history of nationalizing private property and industries. Even if the current regime is gone, that precedent exists. Any investment in Venezuela carries the risk that a future government could simply take your property. That's not theoretical. It's happened before. The other risk is currency. Even if you buy property cheap, if the bolivar continues to collapse and you can't get your money out of the country, you haven't actually made money. You've just trapped capital in a depreciating asset. Currency controls and capital flight restrictions are very real possibilities. So, would I personally invest in Venezuelan real estate right now? Honestly, I'd wait. I'd watch to see what the new government does in the first 6 to 12 months. Do they respect property rights? Do they open up to foreign investment? Do they stabilize the currency? Do they rebuild institutions? If the answers are yes, then Venezuela could be the opportunity of a lifetime. If the answers are no, then it's just another chapter in a long decline. But I'll tell you this, I'm watching Venezuela very closely, because countries don't stay down forever. And when they turn around, the people who got in early in the right places with the right strategy can make generational wealth. Venezuela in 2026 might just be that moment. Or it might not. That's the game. The opportunity is real, the risks are massive, and the next 12 months will tell us everything we need to know.